The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start out the show as we always do with the German DAX. As you can see here, on Sunday night, we opened down about 60 or 70 DAX points. Right at the 78% retracement. And then, of course, we started a huge move where we rallied 200 DAX points. That's a lot of points, folks. That's the equivalent of over 200 Dow points. So that was no small move. However, if we take a look here at the market that was really moving these markets, and that is the Dow Jones, which has been the strongest, you'll notice here that the Dow Jones opened almost exactly at the 61% retracement, stayed there for about 5 or 6 hours, and then around 2:30 in the morning, New York time, the market finally started to move higher, and it went up and made a 3 drive to a top pattern. Now, whether this is going to be a major top or not remains to be seen. Remember, this was happening when most of these Dow stocks like Goldman Sachs and stuff was not open. There was a little bit of pre-opening stuff in Goldman Sachs. It was up like a $0.50. That doesn't take into account the Dow moving up 120 points. So this was all, primarily futures that was going on. While this was happening, the NASDAQ has only been able to make a 38% retracement of the high that we made on November 30th. So this is lagging the market, quite badly. But this is, we live in interesting times, as they say, with the Chinese curse. How much this is related to the thing in Italy, I'm not really sure. I don't know if anybody else is either. But one of the things that was making these markets move was the euro. And if we take a look here, what was happening at the euro at that time, you'll notice that the euro, this is one of the charts from the newsletter this week. And as you can see here, we closed on Sunday. Let's try this again. We closed on Friday at 106.61. Well, last night's overnight low went down to 105.09, 105.09. The old low was at 105. We didn't quite get there. And then the market has now rallied 200 points, which is equivalent of $2,000, i.e., there goes your big rally in the stock market. So that's what's happening with this. They're following the money. So it's hitting technical numbers very nice. That's about, what you can say about it. The most interesting one was the fact of the gold market, because the gold market, let's just take a quick look here at the gold market, and you'll see if I can get it up here. Hold on just a second. Yeah, here we are. Well, I thought I was. Yeah, here we go. This is it right here. You're going to notice here last night in the gold market, you're going to see the gold market had a big rally. We rallied from 78 all the way up to 90 and a half. We rallied $13. That stopped exactly, almost exactly at the 78% retracement of the high last week. It made a beautiful ABCD Gartley pattern. That was certainly, we're in a downtrend, so that was certainly a place, where the market was most probably going to, have some difficulty. And sure enough, as you can see here, the market began to sell off. And what happened was it just kept going down and down and down. It went through the support at the 61% retracement and also at the 78% retracement. It held it actually for about 2 or 3 hours, and then it broke down, and we almost made a new low. We haven't quite made the low yet. We're very, very close. What's interesting here is the fact that platinum and silver are acting incredibly bullish. I just can't believe how bullish they're acting. I mean, it's platinum, as gold was dropping from 90 to 60, a $35 drop, a $32 drop. platinum backed off $3. Silver backed off about 20 cents, and has since come and taken a lot of that back. So there's a lot of discrepancies in some of these markets, and especially with these metals, they're acting really different. If you'll take a look here at this platinum, you're going to see a pretty bullish move here. I mean, this is came off of a 3-drive pattern, and we've only been able to back off a few dollars from the high that we made overnight, which was up around the 78% level. So there's a big discrepancy between gold, silver, and platinum, and we're seeing the same thing in the silver market too, that it's also trying to hold up. We'll put up the silver market, and you'll be able to take a quick look at it, because last night when we were making that move in the gold market, you noticed that silver gapped up. We took out the previous week's high at $17. We went to 17.05. That was the ABCD. And since that time, we've come down and we've tested the 1660 level, which is the 61% retracement of that. And as you know, gold has come down and almost made a double. Well, it's pretty much, in fact, made a double bottom, because it was only about $1 off, from that. So we'll see if that's going to be the case. We'll be able to see one thing at a time, but that's what we're watching here. Anyway, it was, I believe, the euro that was causing all this, the fact that we have that major support there, the fact that we're now 200 pips above the bottom certainly tells you that we've made a major bottom in the euro, which we've been talking about over a period of time here, because the fact, we'll just look at this double bottom again, because it's that important, I believe. Just put this up here so you'll be able to see it. You'll notice here that the euro makes a lower low by 6 pips. Last night we made a lower low by 9 pips. And then what we've done now is we've already exceeded last week's high. So that's a weekly reversal, folks, in the euro. So that should mean something. It might mean it might rally for half a day, I don't know, but technically that when you get a weekly reversal, that means something pretty dramatic. If you look at the one back last December when we had that weekly reversal, that was a huge move also. So these weekly reversals really mean something, so you've got to pay attention. This means that the dollar index, could be, under some problems here. And if we take a look at this was one of the things that we were looking at last week, was the fact that the dollar index, completed some major patterns up in this area and was having a lot of trouble at 102. Well, we did rally up to that 101 and changed last night as the euro was getting tanked. But since we've, given all that back, and now it's heading back down again. So this is telling us that the U.S. dollar is probably weakening here a little bit, which should be good, for, gold and some other things. But whether that happens or not, we live in interesting times, as they say in a trade. We're going to have Norm Winsky on at the break today from Astro Trends. Tomorrow we have Bill Meridian from Austria, Cycles Research. Wednesday we're having Byron Tucker. He just came back from New York, and he is going to talk to us about the ETF seminar that he went to. A lot of great information. And then on Thursday, very special guest, we have Shane Smolian on from wolftrader.net. So those will be our guests for this week. And so we got a full week of some really interesting guests that always have, great information for us. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and the next chart I wanted to show you comes from our good friend Ed Carlson up at the Market Technicians Association in Seattle. It's basically showing you the Dow Jones on the upper chart. On the bottom part of the chart, you're showing the new highs to new lows, and basically you're seeing some pretty significant divergences here, especially during this last run-up. You'll notice you have 3 lower highs that we had during November, December. We also had 3 lower highs between, July and September. And then we made our bottom, right at the time of the election. So this is used to be, this was very, very important. This was telling you what the breadth of the market is. Well, maybe it's different this time, but it's something that in the past has always been a spot of looking for something, really dramatic. If you look at the time from June and July of last year, you're going to see, new highs to new lows also before we had the last major break that we had. So keep that in mind, that it's not just all rosy things that you're looking at as we go through here. Now, with the NASDAQ, that is looking worse than any of the other indices, of course. And this has been the leader all the way up. Let's just do 1 second here. We'll get there we go. We'll put this up here so you'll take a look at it. And then we will be ready to go here. 1 second. Bada bing, bada boom. And you'll notice here that this is what we had. Now, last night, we came very close to the 61% retracement. And then, of course, we reversed and we went above the high that we had on Friday. But the high thus far on this rally has only been at the 38% of that move down, which when you stop and think that the Dow Jones Industrial Average made a 1.618 expansion, and the S&P made a perfect 78.6% retracement, and this one can only do 382, well, it's either going to have to pay catch up pretty quick, or it's telling you that this market is indeed very, very weak, and that's what it looks like at the present time. You'll notice that it does have a very nice head and shoulders pattern that is still complete. And anything below 45.50 in this, which is over 200 points away, would certainly turn this to the downside. But that's neither here nor there. Now, one of the things that I focused on in the newsletter this week was the fact of what the foreign markets look like. And that's what's really interesting here, is because when you look at some of these foreign markets, they look absolutely horrible. Let's just take a quick look here at the, we'll look at the first one we'll look at here is the emerging markets. This one looks, it's been bearish for about 5 years, and we just completed another, major equal retracement here about a month or so ago, and you can see the rally that we had here after the election has not even been a 382 retracement. Now they're blaming some of that on the U.S. dollar, but folks, the U.S. dollar has gone up from the thing, but it hasn't gone enough to make this ETF look very different. Now, ETFs are very, very unusual because there's so many of them, and Byron Tucker will be our guest on Wednesday. He just came, well, he lives in New York, but he was at this conference where for BlackRock and all these other dudes that put out these ETFs. There was all kinds of great information. It was for traders and investors. It wasn't for the public. So he has some really good information on ETFs on Wednesday that will help explain, how the industry is moving and where they're going as far as volume. One figure that he talked about was there's $33 trillion in money out there, and of that, only 1.9 trillion is involved in ETF. So they're expecting ETF market, to explode and see it, really grow in these next few years. Well, it's already growing quite a bit, so we'll wait and see. Now, if we take a look at another one of the markets that we follow from our friends in Hong Kong, you'll notice here that the Hang Seng Index gapped down on Friday. It also is lower today by about 70 or 80 points. So this is also one that has been in a really strong downtrend, especially on the long-term, weekly. That rally that we just had here was only a 38% retracement off the high in September. So this is another one that looks, very, very weak. Now, if we go to the one that's giving Mr. President-elect Trump all the problems today, which is China, he's going to start, I guess, some negotiations with those folks, a little bit different than we're used to. So hold on one second, and I will get the, hopefully I'll get this one up. Oh, dear, where did it go? Well, evidently China has faded off into Taiwan territory. Ah, here, it's back. It's back. So there we go. We'll put this up here, and we'll take a look at it. And we'll be able to put this up here, and we'll see. Yes, I realize that our good friend Stan Hartley is very, very bullish, and I will be too if we make another new high. But frankly, I have to respect these numbers and these patterns, and we're seeing some major divergences, and especially with this new high to new low. If we start a new bull market from this level with that new high, new low the way it is, that's going to be a really, really unusual thing. But we'll have to allow it a little bit of time, to see what happens. This Italian vote, I know it's a lot of things happening, especially in the euro, but I don't think it's going to last more than a day or two, and then we'll see. It's nothing like, nothing like what you're seeing with the Brexit thing or anything like that. There's really nothing like that. Right now, Italy is without a prime minister. They still have a president. And my friends in Italy tell me that Mr. Renzi will reestablish himself here in a few months and probably come out even a little bit stronger than what happened. Frankly, I don't know why anybody would say something, that if I don't get this, I'm going to quit. They're just asking for trouble, if they do something like that. Just like many of the people that wanted to leave the United States if Mr. Trump got elected. Well, not any of them have left yet. Major surprise. And I think once they go to the other countries and realize that this place isn't nearly as bad as some people might think it is, should keep that in mind. Another thing that looks really interesting let's go back to gold and silver a little bit. This was a really surprise to me, what happened last week in the gold and silver. If you'll take a look here at the XAU, Tom O'Brien talked about this a little bit on Friday about how well this was acting. I mean, we've made a Gartley pattern. And we're going back a month now, folks. And, gold has been dropping, and this XAU has been rallying. I know it's gold and silver stock, so that's got to be part of it. But that's not all of it, because even when the market was down, this thing was up. So this could be interesting. Now, this could all change. And, we could reverse and, it goes down to the old level again. But right now, if you're in this, as we recommended, you want to put your stop in at your break-even point, which would be around 77.09, which is about $5.50 from where it is right now. So far, the gold has tried to hold its low. It's trading at around 1168 right now. The old low was 1162.30. This is either getting set up for one of the biggest, what we call short covering rallies of all time, or it's going to pull gold, or it's going to pull silver and platinum down with it, and they're all going to go, heading towards, the Antarctica. So we'll see if this is going to happen. Now, crude oil, another interesting one. We finally broke above the $52 a barrel in crude oil, so that's going to be another one. Stay tuned for Norm Winski from Astro Trend at the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Norm Winski from Astro Trend on. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you. You're on page 1 from December the 8th, Pluto contra parallel. Go ahead. You've got the whole program.
Great. So I thought I'd start off by just highlighting some of the top major planetary cycles and events for the month. And so the next big thing happening is on the 8th. We sort of have a tendency here in this month, a pattern that we have a major positive, we have a major negative right next to it. So it's kind of interesting how probably need to wait till just past that to see how the market resolves itself in regard to when they sort of are canceling each other out. Who wins the battle. And then you don't want to be out on the battlefield when they're shooting at each other. You wait and see who's going to win, right?
Amen.
There you go. So we start on the 8th in the morning. We have Pluto making it a negative alignment to the U.S. moon. This is based on natal chart of July the 4th, 1776, where the planets were on that day. And that indicates to watch for U.S. stocks, T-bonds, U.S. dollar. Then we also have the same point being hit with a positive later that day. So there you go. You have a major negative, major positive. Not sure how that's all going to come out, but both are indicating the same point in the U.S. chart, which tends to emphasize U.S. stocks, T-bonds, and U.S. dollar, but the U.S. dollar in particular. Moving on ahead here, on the 12th, we have some interesting things with we have alignment here for Neptune, which is currently in Pisces. That's a double whammy for oil. Neptune is the planet for oil. Pisces is the sign for oil. So that's a double whammy. So watch for a important change in trend for oil around the 12th. Moving on ahead. Yes, sir.
I want to let the folks know that you're better than 75% right on these days, because I've been watching them, and they come very, very close to these exact spots that you're looking at. So I think these are important days, especially if you're trading some of these things.
I appreciate that, Larry.
Well, I'm just looking at like it what it is. So go ahead. Didn't want to take
Tell it like it is, right?
Amen.
All right. What's that?
Amen.
All right. So on the weekend of the 16th, one of your favorite things, Larry, is Mercury turning retrograde. And that's what we have. So Mercury in Capricorn will turn retrograde, and that indicates Mercury is associated with, in particular, with grains, and particularly soybeans. And Capricorn is the ruling sign for coffee, so you'll want to watch the coffee, corn, oats, soybeans, stocks, and wheat. By the way, just as when I put this together, I just decided to kind of cover the next couple of weeks. We don't. This week is a little bit on the quiet side. I did mention the 8th later in the week, and so the general tendency of the month is that the activity and power of the planets is kind of building to a crescendo in the latter part of the month. Okay, so I'm going to quit. I'm stopping the coverage here for this. And when we get to the Christmas weekend there, and then if the folks want more, they can contact me and get the letter for free. So anyway, we got a couple interesting Mercury things happening around the 20th. I'll get to the other one in a minute. 21st, we have the Moon's North Node doing something with the U.S. Ascendant. That's again indicating watch your U.S. stocks, T-bonds, and U.S. dollar. Then we have another alignment on the 22nd for the U.S. That could indicate, in addition to the U.S. stocks, T-bonds, U.S. dollar, also a little kicker for the oil. And so watch for that then. And then it gets really interesting. Around the 23rd, copper has been active lately, and I got two major cycles, probably two of the biggest cycles there are for copper. One positive, one a negative, both culminating on the same day. And so that's pretty interesting. Not sure how that's going to come out, but let's see. For the first one, it indicates coffee, copper, oats, and stocks. The second one, coffee, copper, oats, stock, sugar, and wheat. So that's kind of a general summary of the next couple of weeks. Just for anybody who missed when I was on your show on the 18th, Larry, just to recap, we were previously talking about the forecast for the election, and I said I was looking for Trump to win by a nose, and so you might have heard that Trump won.
Did he really?
Yeah.
Oh, this is a scoop.
I know.
Hey, that's good. Say, we have a question for one of our listeners, and that is, you mentioned on the 16th we have Mercury is going into Capricorn and going into retrograde motion. At that time, I think we're within a day or two of a full moon. Will that have a multiple effect like we had on May the 19th of 2015 when you talked about the high on that day, which came within about 15 minutes?
Let me
Or
see.
is it just...
The full moon will be on the 13th.
So it's 3 days off.
Yeah, actually, and notice my little lingo here, abbreviations. Notice I have these letters here. AM is morning, AC after the close. So it's really over the weekend, the Mercury retrograde.
Okay. Just
So they're not really lined up that closely. My parameter back then, when we were doing the thing for the May top in 2015, was if they would occur within 1 day.
Mm-hmm. So it has to be an overlapping within 24 hours. They both come together before you have this accelerated effect.
That's it.
Okay.
Like the Beatles said, come together right now.
Oh, gee whiz! You're into writing music too. I mean, I didn't realize you did that. You're going to be almost like Mozart here. Norm, we have one other question, and that is going back to the copper. You said you had a double cycle coming in on December 23rd.
That weekend. It's actually the 23rd.
Could you explain that a little bit more, please?
Well, we have Jupiter is going to do be 181. I'm sorry. Try again. Jupiter is going to be 180 degrees to Uranus, and the Jupiter. That's right out of the Bradley book, Larry. He talks about. In the Bradley book there, he talks about the Jupiter-Uranus cycle and how the different key angles, different phases of Jupiter and Uranus over that roughly 13-year period are basically forecast the ups and downs of the 41-month business cycle, and also is an excellent forecaster for the stock market. Mm-hmm. And when I first researched that, read that book back in the early 70s, that had a particular ring resonance for me because when I saw that, I knew that copper, they always said copper has a PhD in economics, and my family background is I come from several generations of scrap dealers, and therefore I grew up hearing about copper prices going up and down. So I went and researched. Copper was one of the first markets I ever researched. The first stock I ever bought was Anaconda Copper. You might remember that one, Larry.
North side of Terre Haute, Indiana. Absolutely.
Yep, they had the aluminum plant there, and But I researched that Anaconda Copper, and that was the first stock I ever bought. And I walked into the brokerage house there in downtown Terre Haute, DuPont, EI DuPont. They're on Ohio, Larry, and that's where I bought my first stock.
I did too, Norm. I bought that. It was 1958, and my uncle bought me a stock called Elastic Stop Nut. Those little plastic things, that they use for nuts and bolts. They had first come out with plastic, and that was the first stock. It doubled in price in 3 months, and I bought a car. Hey, we'll be right back. Stay with us. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time.
Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, Norm, the next chart we're taking a look at now, I guess, is the daily S&P chart. Do you want to explain some of these?
Well, we just followed through on what we were talking about. Just finished that. So the 23rd weekend, we have the Jupiter-Uranus. That's in a negative angle, 180. That some angles are positive, some angles are considered negative. Jupiter-Uranus is on a 180. That's considered negative. Then we also have Saturn-Uranus at 120. That's considered a positive angle. That's a phase of the, that's a 47-year cycle. So we have those huge cycles kind of contra each other, but culminating right about over that weekend. That's pretty amazing. And then on the follow-up on the presidential election, that put me at 9 out of 11. I've been doing the forecast of the presidents since the Nixon re-election. Now we're on page 2 where you want to be, Larry. And so we're going to talk about stocks now. So I have my key dates here. I'm sorry, go ahead.
No, you got it. Go ahead.
All right, I got my key dates here at the top of the page. Anybody, if you're only doing this audio, I know some people do that. Make sure you go watch the archive version so you can get the dates. And I took all these dates, and where the key dates, I have different methods of finding these dates. One is market math. That's sort of a Gann thing. Gann, like things like square numbers, like 49 is 7 square, that sort of thing. So, and then you count so many days. 49 days, for example, just to use that as an example, and you can land on a date, and that to forecast a possible change in trend. And many of my dates are off of major turning points in the major historical turning points. I also have Fibonacci time cycles that I do, and then I have my astrological dates, and then we also have sort of a natal charts, astrological analysis for major turns based on the different indices like the Dow Jones and so forth. So anyway, I did a composite here, average of these dates, and we have today, the 5th and the 6th as a possible key date, where we have a couple of these different dates matching, and then the next is on the 12th, and then the 19th, the 20th, and then the 22nd. So here's your long-term S&P chart. I think it's pretty interesting when you connect the February low with the June Brexit low, and you continue that on out, boom, look what happens. The market, at least recently, kind of made a top near that line there, right? But here's what's educational about this. Here's what's educational about this, Larry, that's of interest to your listeners, is that most people look at these lines and think, oh, this is just support and resistance. Gann taught us that price lines are also timelines. So even though that this line got broken in October, if you continue the line on, sometimes it can still be an important indicator support and resistance or a change in trend point.
I certainly see that. Yeah, that makes good sense.
Okay, so this is a daily chart on the S&P. Here's a shorter term picture with the 10-minute bar on the bottom half of the page. And you can see here, it looks like, to me, it looks like if you're Elliott waver, looks like you got a little impulse wave down. 1, 2, 3, 4, 5. Looks like we're doing an A, B, C going up. And so whenever this tops out, probably in the next day or so, I think it's likely that we're going to roll over and continue lower.
Mm-hmm.
The way it
Do you
looks to
have
me
any
right now.
comment? The fact that there's a huge divergence between the Dow Jones Industrials and the weakness in the Nasdaq 100. I mean, that's
Oh
usually
yeah,
the
I'm
Nasdaq
with you
is.
there, and I track the highs minus the lows, do all that, and it's classic. A good example, a previous example. Go back and study 2007. You might remember how that was toppy choppy there in the summer, and the highs minus lows kept deteriorating, and the advanced declines kept deteriorating. You know,
Mm-hmm.
I drew the analogy that reminded me of a cancer patient trying to run a marathon. It's run 20, 30. What's run 20, 30 yards and collapse, get back up, run 20, 30 yards and collapse,
Wow.
All
That's
right, moving on ahead.
pretty tough analogy, partner.
Thank you.
Go ahead.
Very much. All right, moving on ahead. Here's your T-bonds. I have my key dates here, the 5th, the 19th, and double up on the 19th and the 22nd, 23rd. Here's your T-bond chart. You've been covering this lately, I think, Larry. I was on your show there in
Watching
early
it very
July.
close. Yep.
I was on your show in early July when I nailed that top right there. And there we had a little problem trying to get the vibration here when we broke what had been the channel line here. But then possible channel not well established yet. Possible channel line when we made this low about I think a Friday or so might hold. It is parallel, but not a high confidence yet on that thing, But there's your key dates. Today is a change in trend day for the T-bond, so we'll have to see.
What percent accuracy would you give this change in trend day today in Treasury bonds on a scale of 1 to 10?
I just have to take the average. I'd have to go, research what's involved in that and so forth. So I really can't give any one date a batting average. Probably the best one of the month is right around the 19th when I have like a big pile up there. Probably the biggest pile up of the month. Big cluster.
Okay, that's good information. Yeah, great. Okay.
Yep. Moving on ahead. Here's your dollar. You were just talking about that a little while ago, and there you go. I was looking for a lot of the stuff is taken right out of my kind of updated information from my December letter, which I published a week ago, and I was looking for a pullback to the 100 area. I think we got to about par. What do you call it? It's kind of hard number to say. 100.50, right? 0.50, about right there. And so, and we have a change in trend due again for the 5th. That's today. Okay, so there you go. I think let's see. We get back up here. Might still consolidate here for a little while longer. Is that what your leaning is, Larry?
I think so, but we've been up here for 2 weeks. It hasn't gone anywhere. It's either making a major consolidation or it's getting ready to have a pretty good correction. That's the way it looks like for me. So we'll see. What was amazing last night was the fact that we had that huge move in the euro. Down $1,500 and then up $2,300. That's a $4,000 move in a euro in a matter of about 6 or 7 hours. That's certainly an outlier event, telling us that the dollar is most probably weakening in here.
Okay, let's move on to crude oil. As we get all these markets in, here's the 5th again. It popped up for the change in trend for crude oil. Then we got the 12th is the big date of the month. We have a big lineup for the crude. I think the 13th is the full moon, so 12th and 13th. Watch for that. We're at the top of the. If you look at the long-term picture here on your February crude oil contract, you've been in a big trading range, and we're now retesting these previous tops here. So unless we're going to break out to make a big breakout here, chances are it's probably going to roll over here pretty soon. What do you think?
I think you got it pretty much spot on. You want to do copper next here, and we'll.
Yes, sir. Copper.
Several people have an interest in copper, so we certainly want to cover this one. Go right ahead.
Okay, penny for your thoughts, right, Larry?
You never give up. I love it.
All right. So anyway, as I talked about earlier, we have the big lineup there around the weekend of the 23rd. It's amazing. And here's your dates. We had one for the 2nd and then the 7th. Let's see. We'll go look at the 2nd. We had a little pullback low here, right to the here. This is amazing, Larry. Look at this. If you connect these bottoms here in late October, these little bottoms here, and continue that line on out, look where we pull back to. It's following that line.
Stay with
All
us,
right,
Norm. We're gonna,
time.
yeah, stay with us, and then we'll have you wind up here in the last couple of minutes in about 4 minutes, okay?
Yes, sir.
Okay, thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, with Norm Winsky from Astro Trend. Norm, before we get on to cover one market, and then I'd like for you to spend specifically about this wheat because it's broken down quite a bit. And then I want to give you some time to tell the folks how they can get in touch with you. Okay? So let's cover the wheat, and then we'll go.
Okay,
go ahead.
Wheat is key to all the grains is mercury. What mercury does, obviously we always talk about the lunar cycle, new moon, full moon with the grains. And then the other thing that pops up about 3 times a year is Mercury doing something. This month is a double Mercury month because on the weekend of the 16th, we have Mercury turning retrograde, as I mentioned. And then a few days later, we have Mercury reaching 0 north latitude, another key point for Mercury. And then keep in mind for wheat, from here, as of a couple months ago and through most of 2017. Jupiter will be in Libra. Jupiter is the planet of abundance. Libra is the sign for wheat. So wheat may have trouble getting off the go there on the upside. Might be under a little oversupply situation there for much of this time. But you still can get rallies, bounces and rallies, and still should be tradable. Here's your key dates. We had the 2nd, and go back here and see that worked out pretty well. That was the 2nd. There's your low right there, and then the 12th, the big 19th area, right, where mentioned the Mercury things, 20th, and then at the end of the month. And we have these lines here. If you connect your lines, the tops and the bottoms that just got broken, the bottom that got broken. Interesting is these lines are due to converge in about a week, and that's just about when we have these. We have the 12th date and also the full moon on the 13th, so that could be interesting. All right, so I'm ready to talk about how the folks can get the free stuff now, Larry.
You better hurry.
What's that?
You better hurry.
Oh, okay. So we got the get the free letter and a class that goes with that, and we need the folks to call me right away because we've got the holidays coming, and it's a matter of doing the class and doing the letter, and then we practice and go back and forth over several days, and so you're not going to get that done one day. We need to get that done this week. Contact me 239-594-3939. Email nwinsky NWINSKI at embark EMBARQMAIL.com. It's on the screen, but read it out for the people. Oh, and you can Skype me at norm NORM.WINSKI. The letter is free, the class is free, but you have to talk to me. So.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.